So, with lending conditions continuing to tighten, where are there opportunities in the credit world? Joining us here at Post 9 with his outlook is Canyon Partners co-founder and co-CEO Josh Friedman. It's great to see you, especially on set. Welcome.
Thank you very much, and happy Thanksgiving to you.
Happy early Thanksgiving. So the market's been throwing a little bit of a party over this idea that the Fed is done raising rates. Do you buy that?
I think the market has consistently overreacted a bit to whatever the Fed chair says. I think in this case, half to all of the stock market's action this year has been since the Fed chair's last two pronouncements. Interest rates have gotten tighter, et cetera. Meanwhile, there's an increasing backlog of credits that are really not easily refinanceable, if at all, even in this environment. And we're starting to see some signs of slowing job growth. Labor costs are threatening margins. We're seeing that consistently. So I think the market's probably a little ahead of itself.
On the idea that the Fed is done, or the idea that there's not going to be a recession?
I think on both. I think higher for longer would be my bias. It's hard to make a living predicting interest rates. I've said that before on this show. But if I had to bet, I would bet that every time the market strengthens, it gives the Fed license to keep rates higher a little bit longer and just be a little bit more sure that they've done what they want to do with respect to inflation. And I also think that wringing out the last bit of inflation is awfully difficult when people have a job and there continues to be a big backlog of federal spending that hasn't actually hit the market yet, but is waiting to be spent in 2024 and 2025.
What is the credit market telling you on that front?
Well, the credit market is telling you that rates are coming down. The high yield market has tightened dramatically in the last several weeks. But I think there's an enormous gulf between what's in, say, the high yield index and what are deemed to be relatively high quality credits and the rest of the credit world, which are not necessarily high quality credits. And that's really the story of where I think the action is in the credit markets today.
So where are the opportunities for you, for a Canyon? Is it still private credit?
I would say it's a combination of more complex private credit, kind of capital solutions, and helping work with issuers to try to fix their balance sheets that are over-leveraged, as well as just identifying opportunities where credits carry a very high level of leverage, but are working hard to figure out how to lower that. We just saw within the last few hours a merger of Amentum with Jacobs Engineering that is a stock deal that will very substantially deleverage Amentum's balance sheet. That alone creates value for Amentum. If your cost of debt drops by 500 or 600 or 700 basis points, that is very, very material. And the bonds went up quite substantially on the potential for this deal to happen. I suspect they're not trading at all right now, but it's an example of the big gulf between sort of acceptable, sustainable leverage and unsustainable leverage. And I think right now the world is still populated with many, many companies, many real estate assets, even structured credit, where things are really not refinanceable in the current capitalization, even in the current slightly better interest rate environment.
You think that explains why the Russell is underperforming S&P? I mean, it's one of the biggest underperformances in decades. And is the picture that much different for smaller business?
It's hard to know if people think that the S&P is dominated by growth companies that therefore will eventually grow into the value, as opposed to companies that maybe are a little more susceptible to the ebbs and flows of cyclicality and as you say, the costs of higher interest rates, which are significant on smaller companies that are maybe more debt reliant than growth companies that don't carry around a lot of debt. So that's certainly a factor, I would say.